not too many details. As they said, they decided to do the press conference essentially to quell the rumors that would have followed. But of course, they have now decided to get into an exclusive dialogue between the three boards. Have cleared that exclusive dialogue to get into a proposed combination merger. Let's bring in a quick reaction now. Our guest has been waiting by patiently. Santosh Singh, analyst at Haitong Securities, joins us. Santosh, as I said, we don't have the swap ratio. We don't have details on the valuation at this point in time. But on the face of it, what does this proposed mega merger in the insurance business look like to you from a strategic perspective?
See, we think, in our opinion, these are the qualitatively two best businesses in India. And that way, it makes a lot of sense because the book quality would be one of the best. And at the same time, if I look at the distribution reach, it will be one of the best distribution reach in India, given that they will have Axis and HDFC Bank. These are the two most potent distribution forces in India. At the same time, Max has one of the best agency channels. So what it does is it creates an entity which has got one of the best bank assurance and one of the best agency channels, which is sort of not there in India as of today. And so that way it creates a very high quality franchise.
You're saying that this makes sense. Let me also bring in Ashwin Parikh, a veteran who tracks this industry. Mr. Parikh, your quick take there on the back of what you've heard now from Analjit Singh as well as Deepak Parikh, talking about the complementarities, also talking about the various clearances that they will be required to take. Expect about a 12-month time period before they can finally close on this proposed merger. What do you make of it?
I must say that, I was expecting merger between one large guy and perhaps one in the middle or in the lower segment in terms of size. But here are two large-sized people coming together. So that's a very pleasant, a nice sort of surprise. Two quick takes. One is, of course, a lot perhaps would hinge around the roles that the two sets of people will play. But by and large, if we accept that one of them will turn out to be financial investor in the longer run, and HDFC will continue to be the strategic kind of partner, then in that case, I suppose IPO plays a significant role in this entire story. And the price at which the IPO sort of, can attract the investors in the marketplace. So,
I don't know if you heard both Mr. Parikh as well as Analjit Singh. At least Mr. Parikh, they're very clearly stating that while the shareholders of HDFC Life are keen for an IPO, but this would actually give them an organic way into a listed entity already. So perhaps the IPO is unlikely on the anvil.
Well, yes. So, perhaps they may use the already listed entity, let's say, which is available with one of the two shareholders, as a possible way of doing it. But, irrespective of that, then in that case, there is an exchange of shares. There is no cash. There is no, encashing of any of the partners. All the partners continue to be there in the form of equity in the new merged entity. But irrespective of that, irrespective of the structure, from the business point of view, really a good combination. Everything, including distribution strengths, including a substantial, good quality portfolios. Is certainly one of the largest strengths of this merger, I suppose.
Santosh, what are you going to be watching out for? Of course, we've seen the stock move up quite significantly. Most of the Max Group stocks excited on the back of this possible merger. But from a stock perspective, what is this finally going to mean? Because this is still, at least 60 days before the due diligence and the valuation exercise is done, and then 12 months till we finally see this merger go through.
Yeah, see, swap ratio is going to play a very important role, and where in terms of where the valuations are. But at the same time, I would think that if these two entities are merging together, and I would think that there will be the swap ratios won't be unfavorable to any of the entities if I take that into account, given the quality of the franchise involved on both the sides. Then definitely, to me, it makes sense to even buy at these levels, given that over next 3-4 years, it could be one of the sort of blue chip companies in the Indian financial space. So the combined entity could be means anywhere. If I look at the current market cap, the combined entity could be anywhere more than 50,000 crore in market cap, and then that creates one of the larger entities in India with very high quality franchise and with the sort of return ratios which are almost one of the highest in the world. I would say it is one of the highest in the world in terms of ROEV. If I look at these size companies, because most of the large size companies have got 10 to 15% ROEV, this will be almost like 15 and 20% ROEV company. So no way I would think a reason why one should not be investing in the stock.
Okay, so you believe that from a long-term perspective, these are the levels that you can consider getting in as well. But we will have to end this discussion here. We're completely out of time. We've been on this story for a large part of the hour. Now, Santosh and Mr. Parikh, appreciate you joining us here. We will, of course, check in with you as we get more details once we have clarity on the swap ratio. Till then,